I am mining investor, and I might start saying mining speculator because I'm more of that than an investor, right? But let's say I am mining investor and speculator, editor of Resource Stock Digest, Gerardo Del Real, along with my partner, Mr. Nick Hodge, who is more of an investor but also a speculator, and the publisher of Daily Profit Cycle. This is the 335th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk gold. We're going to talk silver. We're going to talk a little bit about some of the stuff going on around the world, but more than anything, we're definitely going to be digging into the markets in what is shaping up to be a historic commodities bull market. So we'll get to all that in due time. First and foremost, Senor Hodge, how goes you this fine day?
I go very well, Gerardo. I'm back in my home office. As you can likely see, I've got my Bizarro World neon sign lit up behind me. It's not gotten any less bizarro in the 6 years since we've been doing this podcast, and I'm glad to be here with you. How are you?
I am spectacularly well, healthy, thankful for that. My Cubs are in the playoffs, thankful for that. The wife still loves me. The kids are healthy. Things are good. All the rest is a bonus and the cherry on top, but there is a lot of cherry and there is a lot of bonus. So let's get to that. Gold and silver, you know, there was like a half a day of consolidation, and both metals basically threw a middle finger up at the market and said, no, we don't feel like consolidating yet. We don't care if you guys are calling tops. And so, look, we've been pretty vocal about the fact that both gold and silver have tailwinds. I want to start with silver because we were screaming that if that you know, it might take a while for it to break 42, but that once it did, it would run to $45, $48. And then once it broke that, it's going to new record highs. We're sitting here at 45.12 on the spot price. It's up, you know, some 1.5% today. And silver looks spectacular to me right now. Technically, volume wise, what are you seeing in your technical crystal ball that you have back there that you keep with you on your desk and on your computer?
You already did it. I mean, we needed to get to 45 to get to the next level. We did that today, as you just outlined. So, you know, pull the chart all the way back to 2010. You'll see the all-time highs, and we're not too far away from them. You mentioned the next level up that we have to get to is $48. Would like to see that on a monthly close, either in September or October. And then once you check that box off, you're going to 50 and a record. I don't know if it goes in a straight line, but you're certainly checking off the boxes of things that have to happen for it to do that. And they are now happening. Yeah, that's the answer to your question. I could keep talking, but I read a book recently that said to shut your mouth when you don't have any more to say.
No, I like it. Less is more sometimes. I could take a lesson from that with the less is more credo there. Let's talk gold. Gold again. It looks very similar to silver to me, right? Up some $12 today, sitting at 37.50 on the spot. New record highs once again for the week. Where's that headed?
Yeah. I guess I did think of something else for silver. You know, it goes back and forth. You ask me often, is it industrial or is it precious? Right now it can be both, right? Because it's getting the attributes from gold. We just got a rate cut. It's getting all those tailwinds. It's getting tailwinds from retail folks coming into the sector. And we know it's the rich uncle's poor cousin, and folks can buy that more easily. And that's happening. And then it could be industrial as well, because I saw you tweeted earlier that, or maybe you put it on the sheet about economic growth, right? I mean, economic growth in the United States is 3.5.
Yeah, go ahead.
I know 3.5%, right? 3.8%, and will likely be close to 3% for the third quarter. So it's not in danger of having, being sold down because of the anticipation of slower economic growth. And then to your question about gold, gold did consolidate. It just didn't consolidate at 3,600, but it consolidated all summer between 3,300 and 3,400, which gave it the fuel to do what it's doing now, which is, you know, test the $3,800 big round psychological level. Specifically on the technicals, you know, it's between 36.90 and 37.90, something like that. Bullish headlines seemingly every day, whether it's Morgan Stanley now calling for folks to have a 20% allocation in their 60-40 portfolio. So 60 stocks, 20 bonds, 20 gold, or the Chinese continued buying, et cetera, and on down the line. So lots to like in the gold space, and, you know, above $3,800, we might start getting into that $4,000, $5,000 range that Goldman Sachs was talking about a couple of weeks ago.
Yeah, no, I think it's coming. You mentioned that quote. My favorite quote that I saw this week as it relates to the markets was my favorite headline. This is a real headline on a news organization, a legitimate one. Recession fears rise on better than expected economic growth. And I think that's really symbolic for where we're at with the overall indices. The bottom line with the overall indices, look, Nick and I have a pretty good grasp on the commodity space. Like we dive into supply and demand fundamentals all day long. We dive into, company MD&As and we're in discussions actively with CEOs and chairmen and behind the scenes CFOs and making sure that we have our finger on the pulse of what's going on. But, with the overall indices, like I can't get Tim Cook on the phone. I can't get Mark Zuckerberg on the phone. I don't have that pull, nor do I have the interest to even try to. And so when it comes to the overall indices, I think nobody really knows what's in store, right? You have a stock market that's in a mini overall indices consolidation. And I do have an opinion there. I see the dollar strengthening and rates starting to trickle up higher. And gold doesn't care and silver doesn't care. And you know how my brain works sometimes with my ADHD. It's not diagnosed, but I'm pretty damn sure, folks. Peter Hegseth called all the generals to Virginia next week for a sit down and didn't explain to them why. And so either a bunch of them are getting axed or we're on the verge of like a serious military intervention somewhere. Another one, right? Which would explain capital inflows into the dollar if the reasoning goes that it's been leaked somewhere that we're about to attack another, wherever it may be, intervene between Ukraine and Russia, get more active wherever the hell else. I don't know what it is. We'll find out next week. But the dollar's telling me something's up. Gold is telling me something's up. And the overall indices don't seem to know which way to go with it. Should they continue higher because the Fed is in an easing cycle, or should they pause and wait and see what Peter Hegseth comes up with next week and what the announcement is? I don't know which way the major indices go. I'm pretty damn sure gold and silver continue higher. The trend is much higher. There will be pullbacks, but the pullbacks are getting smaller and smaller, and the runs are getting more volatile to the upside.
Yeah, you're talking black swans. I mean, we had one of those in the copper market. We'll talk about it in a second. But on the data, on the the tape and the technicals, the market looks okay. I saw the VIX tick up a little bit this month, but it's only at 17. It was really higher the first week of September than it is now. So. Can't bar the unforeseen, of course. Predictions are hard to make, especially about the future, I believe is the quote. But yeah, if we go to war, you could definitely have a couple of days of consternation in the market. They've been going up. I've heard a lot of people cite the statistic that what is it exactly? The market hasn't had a 2% down day in over like 100 days, hasn't had back-to-back 1% down days in X amount of time. So it's been really bullish out there. And the numbers have been backing that up. I just talked about economic growth. The other thing I would say is causing a little bit of consternation is the stagflation fear, right? Because you got the inflation ticking higher, and I make a point to say it's okay if inflation is going up as long as the growth can support that and cover it. But if you've got a 3.5% GDP for the second quarter and you come down to 3% or 2.9% for the third quarter, which we're currently in, at the same time that inflation goes from 2.4% in April to 3% where we're at now, market no likey that as much, right? And so I don't really fear sell-offs because I sit here every day and I know how fast I can press the button and I know where my money is. But definitely something to keep an eye on. But I'm not managing my money based on some black swan. I am interested in these generals though. I didn't hear about that.
Yeah, no. I take little things like that and they don't seem so little to me. And then again, you just connect some dots and I go, we'll see. Well, I hope it's a nothing, right? I hope it's I just want to rally all the top generals and all the top brass. It doesn't sound like that. I don't know why you would all have to go to Virginia for that. So we'll see what comes of that. I want to talk copper, where it's at technically, because it had itself a good week and the reason why it had itself a good week, right? We had news from Freeport that it expects much lower copper and gold sales from Grasberg, which of course is a very, very, very consequential announcement and a consequential mine. And so there were two members, unfortunately, man, and mining is tough, right, that were fatally injured last week. And, obviously any company, anybody that's mining always does its utmost to take the most precautions. But you really tighten up when something of that nature happens. And I think after an internal review, they decided that they wanted to play it safe with some of the other areas close to it. And so, look, the bottom line is that that's a lot of copper and a lot of gold that's coming off the market. And I bring that up. First off, condolences to everybody affected by the loss of life over there. Always sucks, right? No right words make that right. But on the supply demand side, unfortunately, there's going to continue to be setbacks on the supply side. And fortunately for us copper bulls that are positioned well, and hopefully you all are positioned well, there's going to be a lot of upside because there's going to be a lot of demand shock, I think, to the upside that bodes really, really well. And that, I don't want to say that copper is going to $30 or $35. I had the pleasure of interviewing Craig Perry from Vizsla Copper at the Beaver Creek Precious Metal Summit. And I asked him to justify his $30 to $35 price target. And he said, well, it's easy, Gerardo. He said, look, when copper was 70 cents, it went up 6-7 fold from that price in a matter of several years to get to that $5 high. And so there's more demand now. There's more global demand. There's more global mandates. There's less supply and there's less discoveries being made. And new mines take a long time to get up and running. He said, so if you just take the $5 price right now and you multiply it by 6 or 7, well, there's your $30 to $35 price target. And so is it that easy, folks? No. Do Nick and I need $30 or $35 copper to make a lot of money in the copper space? No. We've been making money with $3 copper, $4 copper. We're going to keep making money with $5 copper, $6 copper. But I do believe $7, $8 copper in the next 12 months is in the cards. And I think it's going to catch a lot of people off guard the way this silver move is catching people off guard. I recall the experts on Twitter, right, behind the keyboards at $35, $38 silver saying, hey, you made some money from the low 20s. This is the time to take your chips off the table. And we've seen this run before. It's a head fake. And here we are about to push 50 and set new record highs. So, I mean, you listen to who you want to listen to and make up your own mind, folks. But I'm telling you, copper's headed much higher.
Yeah. I guess this isn't an interview, so there wasn't a question there, but I've got a few things to say about copper. So just to put some numbers on it, the Grasberg is 3% of total global output of copper. That is not inconsequential, as you just sort of said there. Goldman's already out saying that this disruption is going to wipe out 500,000 tons of supply and tilt the market out of surplus, right? Goldman was calling for surplus this year, saying that this single incident could tilt the copper market into deficit.
Yeah.
The copper price ticked up closer to 470. We should take a step back and recap what's happened with copper and the tariffs. We had a run in copper to over $6 in early July when Mr. Trump said he was going to tariff refined goods, and quickly turned around when he realized, or else was told, that that's probably not a good idea because the U.S. doesn't refine any copper. And prices turned around and went back down closer to 4 than to 6, although I should probably be sharing a chart. But anyway, they didn't break their downtrend. Like, they didn't go back to 4. They caught themselves, and now they've been moving up ever since, now much closer to $5 than $4. Yeah, mining's tough. I mean, I've been around the block a little bit now. I've seen many incidences. Silver Standard had a mine collapse in the past year or two. I was in the Yukon last year, the week before the leach pad collapsed at Victoria's mine. Thankfully, no one was hurt in that incident, but they happen time and again, and they're I don't want to say par for the course. They're part of the game.
Yeah.
But 3% is a lot. Like, this is a big one. That's like the second biggest copper mine in the world or something like that, right? So, and it's very indicative or emblematic of the mining space, right? Like, and you sort of alluded to it, but you can't just bring a mine online, right? We've talked about it forever. It takes, I mean, I think there's been studies out now that say it takes 20 to 30 years to bring a copper mine online in the United States. Just look at Arizona and the Resolution mine that's been in permitting forever down there. So that's that. Let me do the big stuff, and then I'm going to get into the smaller names on copper. So a little chest pounding. You'll recall that when we had the tariffs coming, I was in FCX, was talking about that on here.
Yeah.
FCX, by the way, is Freeport McMoran, the owner of the Grasberg mine that just had the incident.
Yeah.
And when Trump turned tail on those tariffs, we took profits on FCX. And I said, probably doesn't make sense to be in this North American exposed company anymore if the tariffs don't matter. Let's lock in profits on FCX, which we did, and roll them into Ivanhoe, which, by the way, also had its own incidents this year with the flooding of a portion of the underground mine. And that's one of the reasons I went into it. Sometimes these instances can generate opportunities. In this case, Ivanhoe had sold off on that flooding of the mine. And we took that opportunity to roll our Freeport into it. All that's happened since then, and it's only been 2 months, I'm only talking since July now, is Ivanhoe's gone up 25%, right? They got a handle on the dewatering. Analysts have made site visits. I was reading an analyst report just this morning, in fact, that said the dewatering is going very well, and the incident's not going to have a huge effect on the overall output and development of the mines. So all good there. I was telling Foundational Profits readers yesterday, that's what you pay me for. Not that I knew that Grasberg was going to have an incident, but when you do the right things for the right reasons, sometimes they work out for the right reasons, right? And that's exactly what happened in leaving FCX and going into Ivanhoe. So there's a free pick for you there. And I think I even gave it, was talking about it as a premium pick, Ivanhoe, a couple of weeks ago. So, and then on the smaller side, lots to like. I mean, we financed a lot of companies. I won't give away all the names, but we've had significant returns in companies that are drilling and developing for copper in Argentina and Chile and the Yukon and on down the line, right? Australia most recently. So a lot to like in the copper space. It was no secret that the supply demand balance was extremely precarious. And I think people are seeing that more and more, not just in the mining space, but externally. And I'll start to wrap this up in a second, but I'm going to take it to other commodities. It's the reason you're now seeing tech companies come into the commodity space, right? Because they're saying, hey, wait a minute, like how precarious is the supply? A mudslide can do what? Take 3% of copper offline? Yeah. Wait, we need 50 million pounds of uranium in this country and we only mine 2? Like, let's go ahead and put our tech capital in there and see if we can't, one, expedite the development of some of this stuff. And 2, secure our own supply, wherein we're in there making the offtakes, and that way we know and we have visibility into future supply chains, etc. Just because of exactly what happened this week. So that's that.
No, perfect segue. Let's talk Lithium Americas. So as critical as I am about all administrations, because they all share similarities, right? They want to expand power. They want to take rights away from the average citizen. I don't care which party is in office. They all kind of work along those lines. Some do it more than others on certain issues. But that's generally the trend, right? Pay for war, extend the debt, burden our kids with future debt. Both sides do it. Both sides preach peace. Neither side adheres to it. But something that happened late in the Biden administration was the comically named Inflation Reduction Act, which did not reduce inflation. It accelerated it, but it had some really good critical metals legislation. And when President Trump was elected, I said, if anyone, studies President Trump for 2 minutes, you understand that he has an ego. What he'll likely do is say he's scrapping all of the mandates that Biden implemented and then come back and just go ahead and expand them and just rename them and take credit for them, which is exactly what's happening. And look, he should be applauded for that, right? He should be applauded for that. So just this week, I had a position in the portfolio that was down 50%. Lithium Americas, which has a very big clay deposit of lithium in Nevada. And I'll be 100% transparent. It's a position that I've never felt, it's not a core pick. It's not one that we allocated a lot of capital to, but I wanted the position for strategic reasons. I am not a big fan of the clay deposits. I think ultimately the technology will be proven economic, but I'm no geologist and I'm no engineer and I'm no metallurgist. And so I don't know that to be the case. And frankly, there wasn't a reason to take the risk other than at the time the company had another asset in Argentina that I really liked. That was a different type of deposit. And I thought that would carry the day. They split into 2 companies. And anyway, before I digress too much, just this week, the U.S. acknowledged that, hey, what Nick said, we better start securing our own supply of some of this stuff because we're getting all this stuff from like people that aren't so friendly to us that are likely to be even less friendly to us in the near future. And so what the Trump administration did is it said, look, we gave you a $2.3 billion loan under the Biden administration. I'm going to review that, but we would like to be partners with you. We would like to come in and look at taking a 10% stake in your company. And so look, Chris Curl of Chris Curl's Crypto Cycle, which is to me the best crypto service in the space, it says that the Trump administration operates akin to the way that a mafia organization operates, right? It comes in, it tells you can stay on the block. It tells you can stay on the block, but you got to kick over this much every time that you make some money. And you can either go ahead and pay the money, or guess what? You're no longer on the block. Your lease expires and you got to go. And that's exactly what just happened to Lithium Americas, except the market liked it. Because just like a mafia boss, when you have protection and everybody knows that you're clicked up and that people can't touch you and that there's someone to go to, there's a boogeyman that you got to answer to if you do get touched, people tend to leave you alone. And the market liked that so much that the stock is up 125% this week. So a position that was down 50% is now up some 20% in our portfolio. And it's up on a lot of volume. And the reason it's up is because the market understands that any permitting or loan or funding issues that it maybe could have came up, unforeseen things that could have came up, it's now got a new best friend named the Trump administration that's going to come in and very heavy-handedly make sure there's as few problems with that operation as possible. And is that worth 10% or 20% or whatever the number ends up being if the administration follows up? Look, the game is the game, and that's the way the game is being played right now. And so the market says, yes, it is worth having government come in and take a stake. And so, look, I'm not completely opposed to it. If we're going to be allowing companies to take loans on taxpayer dollars, our dollars, and accepting that cash to further their operations, me as an investor, as a speculator, would like some of my hard-earned tax dollars to provide a return, right? And so if this provides a return on investment, it beats just throwing the money at the company and telling it to keep it or to pay it back on, deflationary terms. So I'm for it. The market likes it. There's going to be more of it. It's going to happen in the uranium space. It's going to happen in...
You read my notes? Are you reading my notes? Is
that what you're saying? Me and Nick, yeah. We say things differently oftentimes and at different times, but we think alike on a lot of the things. I think that trend is a trend that continues, and I think it's a trend that continues globally. I don't want to take more of your notes without having seen your notes, but I'd love to hear your thoughts on it.
It was going to be the same thing. It's resource nationalism is here, right? And so we've already seen it with MP Materials, and it's just going to continue down the line. I mean, is it quasi-socialistic? Is the government, partly absorbing and using, as you just said, taxpayer dollars to invest in capitalistic companies? Yeah, that's happening. So we've got to acknowledge that. At the same time, we've got to acknowledge that we can't control that. And one of the things I often say is, I play the markets. I'm dealt. You can't tell the markets what to do, right? So, and yes, it's going to continue. So you just said that, and it's already been continuing, right? So we just talked about lithium. I just talked about rare earths. Also this week, I didn't hear you mention $240 million for U.S. antimony. And that's not the first time that the federal government in some iteration has gone into antimony. We've talked a lot about Perpetua Resources on this podcast. The Department of Defense has been investing in that company for, I'm pretty sure, over a year now, and they're permitted. And then just read the list. Like, I'm doing some stuff with Critical Elements for a promotion right now, and I got these copywriters asking me about all sorts of stuff. Like they were asking me about zirconium the other day, which I guess got added to some critical metals list in the US, and there's like a single point of failure. Like there's only one company that does fuses zircon or something like that. That's exactly what it was, actually. And so there's a literal single point of failure. Like if that company fails or there's a mudslide in that company's parking lot, like there was in Grasberg, like no more zirconium for the US. And we sort of need that stuff for all the things we need the rare earths and the rare metals for: missile, laser guidance systems, jets, magnets, all that sort of stuff, right? So it is going to continue on down the line, is the last thing I was going to say. And we've already seen the foreshadowing of that for you literary fans out there. I mean, the executive orders have come hot and heavy for copper and for uranium, for refining, for fuel enrichment, and I think it's going to continue on down the line. So yeah, a lot to like, and I'm not going to keep talking about it because that's the stuff we write about in the premium issues and the names that we provide access to for subscription fees. But yeah, the bull market's here, and it's seemingly being backstopped by the federal government. Yeah.
Thank you for your attention to this matter, everybody.
Yep.
No,
absolutely.
Look, I tell you what I don't like. I don't like welfare for farmers. Farmers overwhelmingly voted for this administration's policies. The policy has been tariffs. The tariffs have really screwed the farmers. I love farmers. I grew up, my grandparents were farmers. A lot of my friends and my friends' parents back in Mexico, farmers to this day. Guess what happens when the crop goes dry over there because there was underinvestment, malinvestment, or a government messes it up on either side of the border?
Sure. Farmers don't get paid.
Farmers don't get paid. So when President Trump comes out and says, I'm going to take tariff money, which is tax dollars, by the way, and give it to U.S. farmers, excuse me? Like, that is welfare for farmers. That is socialism. I don't want to hear anything in the next election cycle about socialism or, basic rights for human beings in this country because they don't agree with them. If you take the money because you can't keep your business afloat, for whatever the reason is, because the guy you voted for, his policies are messing you up. And they've been very upfront about the fact that it's the tariffs that are putting them out of business. I don't know what to tell you, buddy. Yeah, you're going to have to vote better or put better candidates up on the ballot. And trust me, there were no good choices on this last ballot. I'm not saying that the other candidate on the other side would have done much better for you all, but this isn't the first time under a Trump administration that farmers get in trouble. And you had a really good point when Trump got reelected. When I asked you, I said, well, do you think things change? And you said, hell no, I already know how this plays out. He's already been president one time. I know exactly how it plays out. It's going to be weaker dollar. It's going to be give me more rate cuts. It's going to be extend the debt. It's going to be more war. He's going to flip-flop on the majority of the issues, and he's going to throw 5 issues at a time, hoping to distract people from the real issue. And oh, by the way, rapists and pedophiles at the highest level are still being protected by the administration that campaigned on outing the rapists and the pedophiles. I just want to remind everybody about that because there still is no closure for those young girls and ladies and women and young boys, likely, knowing how sick these dudes are. Zero closure, zero attempts at whatever possible closure could be had there. And that's getting less attention out there, and it shouldn't get less attention because I think it kind of still matters, right? That the wealthiest and most powerful people in the world that likely are still in office around the world, raped and pillaged at will. Nobody cares about that on either side anymore. I can't believe that that's the case. So hopefully you people keep putting pressure on that and get as mad about that as you do Jimmy Kimmel or McDonald's or Sydney Sweeney wearing jeans or whatever the hell you want to be mad about this week, man. That's my rant.
Tylenol. Yeah, no, that's a good one.
Tylenol.
If farmers have long been recipients of government cheese, and they're red-blooded Americans, and they typically vote red, so you're not allowed to say that, right? Like you got to toe the line, and you can't say, no, the government makes sure that beet farmers get paid because they put the sugar in ethanol and require a certain amount. Like that stuff's reality. And the same with like the corn lobby and stuff like that. But they're hardworking Americans with dirt on their jeans. And so you can't say that giving them money is socialistic because damn it, they're American. But no, 100%. It's definitely socialism when you hand it out. I sense us getting a little bizarro. Are we going there? We got more stuff to talk about in the markets.
I think let's go there. I actually want to get to the premium portion of the podcast, unless you got more things to get off your chest. We covered gold, covered silver, copper. I'd like to touch on uranium briefly before we go to the premium portion, because uranium touched 82 on the spot price. And I think there's a big move coming in the uranium space. The equities are acting as if that's the case. A lot of the smaller, and this warms my heart because I tend to play in that sandbox, right? But a lot of the smaller explorers and some of the picks in the portfolio are up some 100%, 75% in the last week after months and months and months of nothing happening. And most of those are up with very to little news, very little to no news, I should say. And so that's, I think it's a sign of the market waking up and smart capital, big money sensing utilities are coming. And look, all these AI ambitions, $5 trillion worth of data centers that Sam Altman wants to bring on to the market here over the next 5 to 10 years. It's going to require a lot of copper, folks. It's going to require a lot of uranium. It's going to require a lot of lithium. If you are a North American company that has any of those in any significant way, you're sitting in the driver's seat. Don't mess that up, people. Please, I'm begging you. I have one company right now that I'm having deep conversations with on an almost daily basis that has one of the most beautiful assets I've seen on some time on private land here in America. And it's just, I don't want to say it's them dragging their feet on getting going, but there's been hiccup after hiccup, and I'm imploring them to not waste this opportunity because it's a very unique opportunity in the space to create a lot of wealth for a lot of people. And so hopefully that gets done the right way. But that's my take on uranium. What do you think?
I'll talk to you more about that later. Uranium's on a tear. So let me frame it in terms of URNJ because in foundational profits, we have owned that for a while. There was a bit of a sell-off in uranium just about a month and a half ago. There was some softness, and we added to our position. And I know because I was just giving a member talk yesterday, we added to our position in URNJ at $19.75. And that was only, like I say, a month and a half ago. That ETF, that URNJ ETF, is now at $30. It's up 50% in like 4, 5, 6 weeks. That's on the back of a couple of things. The announcement of the expansion of a strategic U.S. reserve of uranium.
Yep.
And then the two big boys, Cameco and Kazatomprom, a couple of weeks ago. I don't know if we talked about it on this podcast, but Cameco guided down on their production guidance.
Yep.
And it was thought that the Kazatomprom was going to get over their hurdle of problems that they've been having recently, but in fact, they are not going to hit their production targets. And that speaks to the same thing we were talking about with copper just 10 minutes ago. I mean, mining is hard. Hitting your targets are hard. Finding the ore, even when you got the best mine plan, is hard. Shit happen. Strike happen. Hudbay's got a mine shut down now in Peru because of unrest, unrelated to uranium. But this stuff happens all the time. And then I've seen the prices go up on the stocks. I just talked about URNJ, but across the board, and lithium too is something I forgot to say. So after the Lithium Americas thing that you were talking about, I've seen the lit ETF and the small names that URI are involved with up 5, 10, 15% in a day just in the past couple of days. So people are getting that message. Where do we want to go? So we can do Bizarro Banter, or we can do a reader question and then get into premium portfolio picks.
Let's do a reader question. Yeah, let's do a reader question. I want to save the Bizarro Banter for next week because I suspect we're going to have a heck of a week's worth of headlines that we could tie it all into. And I think some of the notes that we put for Bizarro Banter are going to really line up with some of the stuff that we're likely to hear out of the administration over the next week. So let's save that one, but let's definitely get to reader questions because we love those.
Good. And I'll get a little bit local too, and I won't dive into it too far now, but you've heard me ranting about the raising of taxes in Washington state, which they did locally and at the state level last year. And tax revenue is down this year. So what's the solution going to be? More taxes. We're going to raise, wait, you raised taxes and the revenue didn't come in. Let's just do it again. Like, I just envision the politicians banging their head against the wall, like definition of insanity, cocksuckers. Anyway, onto a reader question. So we'll do a reader question and then we'll get into premium portfolio picks. So we'll give the answers to these questions away for free. I suppose it's from member Josh, actually from Spokane. This is a gentleman who writes in frequently and has been a great subscriber to multiple of our publications. He's got 2 questions. Maybe I'll take the first one, you take the second, and then I'll chime in. First question is, what are some of the reasons you like the Battle Bank investment? I think that's it, right? Yep, you like the Battle Bank investment. So first, some context. Battle Bank is a private bank led by Fred Schroeder and with the lead investor whose name is Mr. Rick Rule, who has put in millions of his own dollars. And that's the first answer to your question. Why do we like Battle Bank? Well, Frank Schroeder has done this before. He ran a bank called Everbank that early in my career I did some affiliate marketing for. before, although they, had much larger affiliates that generated them customers. But that's how I got familiar with Everbank originally. It started in the 90s and ended up being sold in the 2000s. I want to say 11-ish, but I could be wrong, to TIAA for $2.5 billion. That's with a B. So Mr. Frank Schroeder had a multi-billion-dollar exit on a bank that he started. Imagine he had some non-competes, enjoyed retirement for a little bit after he sold that bank, and now he's back at it again with a company called Battle Bank. These are, I would want to say alternative banks is probably an appropriate term. These are banks that really don't have branches, that don't dabble as much in checking and savings and loans, but do more not hard money loans, precious metal loans, where you can receive credit against your gold and silver bullion holdings, lots of FX, foreign currency transactions, letting you get exposure to Swiss francs and other forms of currency, etc., which is attractive to folks who are in the industry that we're in, right? Independent, self-directed investors, etc. So in this new iteration, Battle Bank, we had the chance to get in at the ground floor. That's the second answer to your question. Yep. We got to put in money at the same exact level that Frank and Rick put in money. That's probably about 2 years ago now. So full disclosure, I'm a shareholder of Battle Bank, and it's been a long row to hoe, to go back to your farmers from a couple of minutes ago. To get the bank approved, they needed Office of the Comptroller, OCC approval, and they needed Federal Reserve approval, which they now have. They did that by acquiring a bank. I think it was in either Minnesota or Wisconsin. And then they used that bank being already chartered to clear the comptroller hurdle, and now they've got the Federal Reserve approval. So this bank will be in operation this year, and that's sort of the gist of it. I think Rick's up to $5-7 million of his own money in the deal. They've raised some $30 or $40 million. We'll offer the products to our subscribers once it gets going, so you guys can open up accounts at the bank. And I think the last part of the question, or the last answer to that question, is diversity, right? Like, I'm concentrated a lot in the things that we talk about here, metals, minerals, commodities, speculations, things like that. Yes, I have an IRA and I do some other stuff, but to be able to get a toehold in a brand new bank run by someone who had $1 billion exit before, it seemed like a pretty good investment to me. It's private. It's not traded. I don't do a lot of those deals. Yeah. And this is one of those things where you will probably be collecting checks down the road, right? It may never list. It might just stay private and send you dividends or whatever. So, for all that is the reason that we put it out in private placement intel and invested in Battle Bank.
Yeah, I like it. Second part of that question was, what are your thoughts on the Patriot Battery Metals name change to PMET Resources? I love the name change. I think it's reflective of where the company is. It started as a lithium company that was specific to battery metals. And look, it now has arguably... Well, it's not arguable that they have a world-class cesium deposit. It's the biggest in the world, right? But arguably they have a cesium deposit that is worth more than the lithium potentially. Those are champagne problems, folks. That's a good problem to have. They have a suite of other metals. They just had news this week on some of the other metals where they're proving commercial viability of those. And so Ken Brinsden, the quarterback over there, he's brilliant at creating products and creating value out of these different metals. He's done it before. He understands the market well. He has the partnerships and the Rolodex or the network to be able to bring in the right partners. And the bottom line is the company is not just a battery metals company anymore. It is a resource company. I joke that it should have been called Patriot Superconductor Company, like superconductor metals, right? It has everything it needs to brand itself at that. So no, look, I like the rebrand. I like the freshened up logo. I like the name change. I think what's really important is the news they had this week that they're looking for downstream partnerships on some of those other metals, and that they're working on providing initial PEAs, economic studies, to start getting a peek through the window, an early stage peek through the window of what potentially that cesium could be worth, what potentially some of those other metals can be worth. And I think I think the numbers are going to catch a lot of people off guard, and I think it's good if you get caught off guard to the upside. And I think the market's starting to sniff that out. I also think it coincides beautifully with that lithium bottom that, likely happened a couple of months back. And so not a coincidence that some of those names are starting to catch bids in the market. I suspect those shares go much, much higher finally, right?
Excellent. Yeah, that's the question. You got the answer. I won't weigh in, although I did meet with those gentlemen this week. There's a lot to like at the Shakichiwanan project, I suppose it is now.
Shakichiwana, I can finally say it, by the way.
You want to do premium portfolio picks?
Let's get into it. Let's get into the premium portion of the podcast. Look, it's been a hell of a week. It's been fun as always. This was the 35th episode of our weekly therapy session we call Investing in Bizarro World. Buckle up, folks. It should be, I have this weird, eerie feeling it's going to be a weird, long, eventful week over the next 7 days. So hopefully it's for the best. I don't suspect that to be the case, but I am the optimist usually in most of the groups that I'm in. So let's hope that everything surprises to the upside. I think the markets will, though. So I think that's good news. Take care out there, everybody.
See ya.